So let's move first to what the angst of last week, which was the situation with regard to TTNGL. And we go back to that first graph, which shows changes in prices in the three outputs of the company that TTNGL has invested in. And what has TTNGL invested in? It has invested in PPGPL, Phoenix Gas. And so we can talk about Phoenix Gas. So where is the angst? If you look at where the angst is, you will see that as you go back to that screen, you will see that the prices of these three outputs, propane, butane, and natural gas, has been volatile over time, responsive to market prices, and also responsive, for the case of PPGPL, to volumes that are available, and volumes that are available simply because of what is the volume of gas that is flowing through their services at Point Lisas. So as you can see, what has been happening is there has been volatility way back from September 2017, and even before. When you look at the 9-month period, what you can see there is a situation where prices have been changing up and down. If you go to our next graph, what would you see? What is the angst about? The angst is about the prices that have been, the earnings that have been taking place with regard to TTNGL. But let's stick with this graph that is on your screen. And what you are seeing is to reflect what is happening in terms, if you look at the 9-month period in the year 2018 and 2017, what you would see is an uptick in prices from previous years where the prices were going down. And again, in this period, 18 to 19, what is happening? You are seeing a situation where prices have come down again. So let's look next at what are some of the average prices, the weighted average prices for these three outputs of PPGPL. And the average prices of these outputs have come down almost to the level of 2016, as you would see, and 2015. When you look at this graph, what do you see? Way back at the time of the APO and the IPOs and so on, you would see that the average price of the output was 73 cents, 64 cents, and went up in the period 2017, 2018, and is back down to where it is 2019. But if you also look at volume, when you look at volume, production, and export, what are you seeing? You are seeing it is about stable, where export was 6.1 over the period in terms of number of barrels that has been exported. What is the difference? The difference is in this line. It's in terms of prices. So when you consider the angst of the situation, is there are certain disruptions that are taking place. One is that while we continue to produce, or I would say when PPGPL continues to produce at a certain level, here is the problem. The problem there is disruption in terms of adjacent regional markets. And the main player in that is the US, which has now become the largest producer of oil per day, 12 million barrels plus per day, and also in natural gas, 92 billion cubic feet per day, and is now the largest producer. That is going to affect, in terms of the volume increases, it's going to affect prices across the board, and it's affecting PPGPL, and by extension, it is affecting TTNGL. So let's go now to our next graph, which will show you what are some of the challenges with regard to PPGPL and NGL. So we've talked about increasing supply, adjacent regional, but from the point of view of PPGPL, higher feedstock prices, that is, higher natural gas prices. 1. 2, in terms of the contracts that are being regenerated by the NGC, and this is impacting the feedstock prices for PPGPL. Drier gas. Well, drier gas, over time we have seen the extent of extraction from every unit is becoming less and less with regard to the inputs that PPGPL needs for its own production of butane, propane, and natural gas. And well, so much for below production levels. I've spoken about it already. There's not much difference in terms of the production levels, at least from the figures that we are seeing from the Ministry of Energy. There are other issues, the downtime at Atlantic LNG, which also feeds some of the output into PPGPL. And also the question of new accounting frameworks in IFRS. So, for example, the prime issue is that Petrotrin owes money to TTNGL, PPGPL, and in so doing, they have to write off some of these receivables because they are not being received in a particular time frame, and that is creating an expense on the books, which should be corrected soon, I would say. Then we've spoken about NGL prices because of the disruptions caused by higher volumes regionally, increased competition, and the geopolitical issues with regard to the trading war between the US and China, and it has ripples across the world. So these are some of the issues. We have been asked, what is our view? Our view is, with regard to TTNGL, it's a buy recommendation on the basis of some of the initiatives that are taking place. One. Two, that at the price of $21.15, which is about $7.95 below the top price of TTNGL during this year, at that price, with a dividend holding, and we say holding, at the $1.50. This is the highest dividend paying stock, TTNGL. So we maintain our recommendation of buy for TTNGL.